Here comes the one tip and the only one tip you're going to need to find better trades. That's what we're talking about in this video, guys. How to find better trades. And it's all about higher time frame analysis. We're going to start things off by discussing the highest time frame. We're going to go out to a daily, go out to a weekly, whatever you want on the highest, and tell you what's important about those levels, then work down to a medium, and then stick around because 4 and 5 are probably the most important. Sean's going to kick things off on this video and talk a little bit about why higher time frame analysis is so important.
Thank you, Brendan. And look, I mean, for me, it's pretty simple, and that is that you have to have outs. You have to be able to look at a little bit of a larger time frame. A lot of the times, us as traders, we sit down and we sort of get that little fear in our eyes because we're looking at, the level 2. I mean, this is a daily chart here. You're looking at a level 2 and you're worried about all the price action that's happening. Where are the candles here? What's happening? Look at the time in sales, everything. So, you're just kind of getting a little bit overwhelmed sometimes at some of the different levels you're looking at and what's happening intraday. So, big flushes down, big retracements up. They look great on on a minute charts or daily charts, but when you actually pull it back out to a daily chart, then you get like one big candle here, as opposed to sitting down and saying maybe you got sort of sniffed out here in some of the noise that happens on minute charts or 3-minute charts, 5 minutes, whatever. But I'm going to start with the daily here, and I mean, it just goes down to this fill is what we're going to talk about right here, this 50-50 fill that we got on KSS. So today, Kohl's reports. We like the report. Retail's been hot. There's a bunch of, surrounding this situation here with KSS, the reopen, just whatever. Macy's came out as well. So we know we want to go long. So that's the first thing. So then I just pull out a daily chart and look at all of this consolidation right in here. I mean, we can even maybe make this even a little bit bigger so we can see. Look at all this love for KSS down here at $50. If I'm simply looking at a 1-minute chart or something like that on KSS, and we'll sort of put that out right here, it doesn't, even if I zoom it back and go see yesterday, you don't see some of that love where Kohl's is going to go. So 51.70, even the day before, 51.60. So you may have used, if you're just using a daily chart, this 51.60, something like that may have been a spot for you. But because you pulled it back a little bit and used a daily chart, you're now able to see, hey, look, there's a lot of consolidation here. That report was good, not bad. So it has to somehow, if it's going to gap down here, where are we looking to get long on any possible pullbacks? So for me today, it was easy. $50. That was going to be a level that we thought could possibly get defended. So now let's go to a shorter time frame, and just to show you the chart, or sort of what we did here today, we come in early, we like the report, so we take a small bid here at 53, just because it did, again, came back in, then it got another bid at 52, and then look what happens right off the open. We actually get a flush. Maybe I can zoom in a little bit more here. We actually get a flush all the way down. And again, this is actually in the second candle of the day here, maybe second or third candle of the day. You get a big flush down, it hangs out, and then, let me take off these fills here so you can see what I'm talking about. You get these wicks down here where it actually tests that 50-50 area, and then it just bounces right back up. So these wicks tell me that, hey, there was support. We tried to crash down. Now let's put those back on, and we defended that 50 area. So again, where would we be wrong? 50, 49, 50, something like that. So we get loaded up here at 50.75, and then we wind up taking, unfortunately, we take $3 or $4 there, and then it goes all the way to 56. But to me, that's very important, Neil, why you want to look at it daily, because you can get a little bit of a better idea of when the stock's been here before and where it's possibly going.
100%, Sean, there. And look, someone's going to have to tell me in the comment section below, who came up with the term, when in doubt, zoom out? Because I've heard that on our trading floor. I've heard it from other traders. I'd love to know who it is that coined the term, because I love it. I think it's fantastic. I'll give you an example of a trade today where there wasn't even an overall directional bias. Came in and the market looked like it was rolling over. It was at a capitulation point where a couple of down days in a row, as strong as the market's been, it's either reversal or if we follow through. And I wanted to trade something that I could find that would have a strong directional bias regardless of if the market pulled back in. So that led me to, when in doubt, zoom out. And I looked at Lemonade, which isn't normally a day trading stock for me, but I start with the daily chart. And what this gave me is just simply allows me to find a little bit of a bias. Now, you can look here at it breaking back below the 50-period moving average. That's one way to think about it. The double top that it put in at 115, and then it marching all the way back in. You can see you're in a downward trend, putting in lower highs since the start of the year. This is January, and this is where we currently sit as we tape this in August. So you come in there and you have, okay, I've got a stock with a directional bias to the downside. Now, you can have fundamental reasons why you think it's going down as well. I mean, that's obviously not going to hurt. Now that I can clearly identify a downward trend, whether it's going to be using your 50-period, your 200 crosses, or just the trend on the daily, I want to go to the medium, because this is where I want to be able to figure out, okay, like, what am I doing here? Like, what kind of behavior do we expect? Like, how is this stock going to move when I go to put on the trade? So I go to a 15-minute chart just so I can try to identify. I can still see the clean downward trend, but then I start to look at what are the levels that we're going to trade around. It's not enough to say I just want to short it. I mean, I want to short it around a clear resistance point. Now, if you were to look, we talk about support turning into resistance at times. The 70-50 is going to stand out here, and that's going to go a couple of sessions back. In the 15-minute, you'll look at maybe a week of action, maybe a little bit more if you like. I've zoomed it in here. Then you have another cluster right around 750 where you had a rejection and it fell through. Then you had it, again, testing 750, trying to break, failing, testing 750, 70-50, trying to break, failing once again. So, yes, you had a couple of breaks here at that 70-50 level, but they couldn't take out the next level up, and they immediately rejected in that downward trend. So right then and there, I know the price area that I want to be short off of, right? So I've got my downward trend. The 15-minute chart has given me an area of rejection that I can use for an entry. So I go all the way from the farthest to the medium to the minute chart. And then there's a couple of ways you can do this here. Now I'm going to show you the one that I favored. So I've identified 70-50. And on the minute chart, does 70-50 look like anything when I pull this back into yesterday's action? No. That's why I identified it on the 15-minute chart, because it's not going to look like anything. If I only look at this one chart, the minute chart, not telling me much. But we do get a nice press into the open. It starts going into the upside. Once at about 9:55, 25 minutes after the open, it makes a high at 70.30. It's rejected again. Now, there's a lot of ways you can get into this trade. For me, I'm going to get in on that rejection on the way back down when it breaks 70. Now, I wouldn't fault anybody if you allowed it to test a couple more times higher. It tests 40 here. Maybe you want to enter at 70.10. It tests 40 again. Maybe you want to enter at 70. You want to allow it to make a lower high. You're going to enter here where I did, like the fourth time through. All of those are perfectly acceptable. The principle is about the same. If anything, if I was going to take more shares, these would have been additional entry points. But that's just however you prefer to trade it. The substance remains the same. Because each time it was a break and rejection of those levels, to deliver that 70-50, I wanted an entry in the same way, and that's why on the minute chart we allow it to go up, break into that range, fail, and then we're going to get in at 70. And then from there, I'm just going to play the range all the way into the open price, where we're sitting there at like 68.50. We break that, and that's our ultimate out, guys. So you start off with that higher time frame analysis to develop that trend. And the medium time frame, that 15-minute, like it gave me an actionable level that if you pull up the minute chart, it's just you wouldn't have seen it. It's just there's no chance you're going to pick it up there. There's way too much noise. So that gives me the type of entry that I'm looking for in the key level. And then you go to your lowest time frame. As a day trader, of course, you're going to execute using your 1 minute, sometimes 3 minute chart shot.
So key to understand where the key levels are, first of all, and we do that, as we said, by going out to those daily charts. Even a weekly chart I sometimes look at just to get an overall context of directional movement and major levels. Then, as Neil said, we move down to that medium time frame analysis to understand a little more what has happened recently. And then for execution, there's no wrong answer here, guys, whether it's a 1 minute, I've seen some people use a 2 minute, even a 3 minute chart, all will work. Sean, you want to give your last thought on smaller time frame here?
Always, yeah. I mean, Neil talked about a 1 minute, a 3 minute, all of them work, right? And they're all fantastic. It's just pick what's best for you and really just be comfortable with what you're looking at. And I'm going to use an example today from Microsoft. We saw the market starting to rally and then, off this 3 minute chart. I mean, look at these levels here, guys. It kept bouncing off 292, 292, 292. Not only that, but we do have some 292 wick bottoms here from yesterday during the day. So we have 292 gap right there. And then as you can see, it coils up right now. This is Microsoft. So as the futures started to run here in the NASDAQ, we just waited. And again, buying and selling in between here is not going to be that profitable, especially if you're not going to have the ability to scalp. So you got to wait for your time, pick your spots. And I think we do a good job here. And that is that look for this area, right? Look for this consolidation. And then if you see that, so I mean, just right in here, I mean, I guess we can all see that. So that basically 291, 290.50 up to 292. And you can see those tops coinciding right here. So as soon as you get that break of 292, it's all go, man, and it's just straight to the upside there. Breaks. Then we start to use some of these other higher levels, and you can start to look back and say, okay, where are we right here? Again, this is another 3 minute chart. So look where we get our first piece out. Again, right on the bottoms of these 3 minute wicks. And then to take it to the upside, kind of getting out. Look at yesterday's high, 295, 294.50, 294.75, and that's right where that next part gets out, 295.50, right? So you can sort of go back and forth. That was 294.50. That's 295.50. So you can use some of these little jump points here to get in and out of your trades. This works on a 1 minute or a 3 minute, but you may have a little more confidence when you get that 3 minute break. That just shows you there's a lot of coiling up here, back and forth, back and forth. When you get that break, it's nothing but upside love. So Microsoft almost does nothing all day, and then as soon as it breaks, it goes, right? So that's the kind of trade that I like, and that's a good example, I think, anyways, of a 3 minute breakout.
The one tip that will help you find better trades overall, use higher time frame analysis. Get out to those daily charts, and as I said, even weekly, monthly charts to get an overall context and work your way down from there. Hope you like that one, guys, and can find better trades now. Here's V.
Hey guys, thank you for sharing these time frame tips. Dear viewers, please subscribe to this channel to see more great videos.